What if the economy doesn't get hurt bad? What if we don't see unemployment go to 7, 8, 9, 10%, like all these experts are always predicting? What if we don't see that? Have we even considered that? What if unemployment stays in the 3s and 4s? What if inflation gets under control, as it's been starting to get under control, right? What if that continues for the next 6 to 12 months, right? What if the consumer gets in a much better place over the next 6 to 12 months than they've been over the past 6 to 12 months? These are all things you have to consider. You can't just laugh this off and be like, oh man, it's the end of the world. Why is the market doing this or something like that? It's absolutely ridiculous, but I see these Wall Streeters do it time and time again. And it's an easy thing to do when you've been bearish, you've missed this whole ride for the past 6 months, right? And you didn't take advantage of all the opportunities that the market presented us for 2022. And now you're hoping, wishing, laughing, and hoping this market goes back down, right? And it's just what we see playing out right now. Some would say there's a certain individual that is the boss of Jamie Dimon, okay? And no, it's not the board of directors of JP Morgan, even though that would technically be the boss of Jamie Dimon. Some would say the boss of Jamie Dimon is who? Jerome Powell. That's what some would say, okay? So let's say in this hypothetical scenario, that is his boss. Well, his boss wants people to preach against the economy, to scare people from spending, right? To not cause anybody to take any levels of major risk taking right now in the market, because any of that works against what the big boss, Jerome Powell, is doing out there, right? He's trying to prevent, if anything, the spending, which is why they keep raising interest rates, and they kept raising them, right? And so there's a moment when Jerome Powell is going to be fine with people going out there and spending money, and taking out loans and buying new cars and new homes and this and that. But that isn't right now, folks. That isn't right now. And so if you're on this conspiracy wave of Jerome Powell being the boss of Jamie Dimon, then you could be on the thought process of he's only doing what his boss wants, which is to scare everybody, to tell everybody, you need to tighten up. You need to be in a position right now of, security. Don't take risks right now. Don't spend money right now. Okay. The biggest thing that I think is the most overlooked in the market is the fact that many of the biggest companies in the world, and just many companies in general, have had the past, I would say 6 to 12 months, right, to really look at their businesses and start to right-size these businesses. Whether that means cutting down on software costs, whether that means letting some employees go, whether that's reorganizing some departments, whether that's slowing down on hiring, everything like that, right? And they've really had a moment to really, because revenue growth is not very exciting right now. We're in it's called a slower economy, whatever you want to call it, right? And I think what's going to emerge is a lot more healthy companies. And you saw this actually in 08, 09. Companies emerged much more healthy coming out in 2010, 2011, 2012 than they were previous to the great financial crisis. And I believe the same phenomenon is happening now. I believe Amazon is going to be a much more healthy company over the next 2 or 3 years than they've been over the past 2 or 3 years. I believe Meta is going to be an extraordinarily more healthy company over the next 2 or 3 years than they were over the last 2 or 3 years. You don't always need your revenue to go crazy to have your net income increase in quite a dramatic way, which can increase your valuation, right? Many of the biggest companies in the world have done massive layoffs that are going through right now and started to go through in fourth quarter. And those layoffs are not just some, workers making $10 an hour or something like that. These are, workers making $100K, $200K, $300K, $400K a year. Corporate workers, okay? And we're talking about billions of dollars of savings. We're not talking about millions of dollars of savings. We're talking about billions of dollars of savings. When you look at what Meta is going to be saving, Amazon's going to be saving, you go through a lot of these companies and you go through what their layoffs were and the cause of benefit to that, it is astronomically high. And I just don't think there's enough, focus on that component. And that's just one of many reasons you're going to see EPS take off like a rocket ship for many of the biggest weights for the NASDAQ and even for the S&P 500 as this year kind of ticks on here. And what you're going to see from countless of these companies, and specifically the biggest ones, is they're actually going to report better and better earnings as the year goes on, with actually really strong back halves of the year in terms of earnings per share. We're talking bottom line. I'm not talking about revenue growth. I'm talking about bottom line EPS growth. And the reason being is so many of these companies have done huge cutbacks in their workforce that hit them in fourth quarter and is going to hit them obviously in the first quarter and a little bit in the second quarter. But now their business is going to be streamlined. Meta's profitability is going to go to the moon in the back half this year. Amazon's going to, okay? I mean, if I look at just like the whole host of the most important stocks out there, I see their profitability increasing quite dramatically in the back half of this year. It's going to happen with a lot of small caps too. A lot of these small cap stocks got absolutely wrecked last year by inflationary problems, shipping costs, everything like that, trucking costs, everything. They got absolutely wrecked. Commodity costs, and all these businesses are seeing, shipping costs has fallen off a cliff, trucking costs have fallen off a cliff, commodities have fallen off a cliff. And so what you're actually going to see is from a whole host of companies report far better profitability. So we're going to go through a very strange time where, the revenue growth might not be very strong or actually weak. But what you're going to see is EPS growth way outpace the top line growth here. So it's going to be a funny time to go through. And you'll start to see a little bit of that in the second quarter, but you're really going to see it in the numbers in the third quarter and the fourth quarter of this year. Why does this bull market feel so bad? Why is it so hated? Okay, I think there's a few reasons for that. One is constant just negativity from the media, from social media, from everywhere the past 6 to 9 months, right? About it has to go lower, even 6 to 12 months, we could say has to go lower, just the end of the world, all that stuff, right? I think when that's the perspective that you're getting constant kind of fed out there, a lot of people just start to subscribe to that. I think the second component of that is because inflation hit a lot of folks last year, right? Specifically a lot of retail traders that maybe are in the middle class or whatnot, right? It's not the best feeling if, let's say, you're not in the best financial position to feel bullish on the market, right? Because if you feel negative, then you're going to feel like about your own financial situation, you're much more likely to feel negative about the market, right? Think about that for a moment. I think another component of this kind of hatred toward this bull market that we're kind of slowly getting into here is just the fact that investors look out there and they of the assumption that because certain markets fell certain percentages in the past, we had to fall that much in this market, which just isn't reality. No market finishes the same. And a lot of people thought, this is going to be an 08, 09. And they thought, okay, we're going to fall, 50% plus in the indexes, and it didn't happen, right? And so therefore, a lot of people just kind of they subscribe to this thought process. And so there's just so many various reasons on why this is a very hated kind of bull market we're getting into here. And you got to understand, many times when you're coming out of a bear market and moving into a bullish one, it's going to be very hated. I mean, I can tell you, the investors in the market were not bullish in 2009 for the most part, right? And yet we went into this massive, obviously, bull trend when the economy was still getting wrecked and continue to get wrecked for the next couple of years, right? And we continue to see housing weaken. And meanwhile, you saw stocks flying to the moon. And people were like, just that's the way it is sometimes. And, the same thing can happen to bear markets when people aren't ready for the bear market yet. And right now, people aren't ready for a bull market. Mentally, people this last 6 months move, I think for most investors, they just haven't been mentally on that wavelength to go bullish yet. And so they see the market going up and up and up, and many of these stocks doubling up, 70% moves, 100% moves, 150% moves. And they're like, and it's very uncomfortable feeling for, I think, a lot of folks out there.